and it is posting its first ever quarterly revenue decline on record. Now, it's been an incredibly difficult quarter for Tencent for a number of reasons. We know in China during the quarter there was a resurgence of COVID, lockdowns in a number of major cities across the country as well, and that really affected the economic performance. And you're seeing that, I think, trickling through to the numbers. Now, I'll pull one of the revenues from online advertising down 18% to about 18.6 billion Chinese yuan. One of the things we've seen is when there are economic downturns, brands do cut their ad budgets. Tencent makes quite a chunky portion of revenue from online advertising, and you're seeing a hit there. There's always a big focus as well on gaming as well. And given the slowdown in the Chinese economy, there are concerns about a slowdown in consumer spending as well. One of the things Tencent's saying here is that PC client games revenue grew 5% year on year. So that's a positive. They're still managing to continue to grow the gaming business, even though there has been a few difficulties. It's not just economic, it's also regulatory. The regulatory environment in gaming has got a lot tougher. Last year, the government introduced regulations that effectively said children under the age of 18 cannot play online games for more than 3 hours a week. You are seeing that filter through. And the other big thing is regulators between July last year and April this year froze the approvals of new games. Tencent only released about 3 games in the last quarter. You are seeing that drag, but one of the things you are seeing is that they're continuing to monetize the existing games that they have on the market. So that is a positive.
I think it's interesting here that in their headline release, they're talking about the games market and saying that the international games market is experiencing a post-pandemic digestion period as players resume offline activities. That's basically a fancy way of saying people are playing less video games now. And that's obviously going to hit a business like Tencent.
And we saw a surge during the pandemic, people staying at home, and they turned to games.
It's also been reflected in the stock price as well. So
Absolutely.
Just talk us through some of the dynamics there, because if we bring up a stock chart of Tencent, over the course of the pandemic, obviously it did very well, but if you look at the levels of where we are today, we're back to 2020, almost end of 2019 levels. So how much of the boost was on back of pandemic video gaming?
It was certainly on the back of pandemic video gaming. And if you look at a business like Tencent, video gaming is about 1/3 of the revenue there. So that was a huge boost. And actually in recent numbers from the likes of Sony and Nintendo, we are seeing the sort of gaming boom slightly fading away. I think there's a few other issues at play as well for Tencent specifically. I think that for Chinese tech companies in particular as well, we've spoken about it a lot, the intense regulatory environment now in China as well. That's weighed on many other areas of the business, not just gaming as well. Social media is a big part of that. I think if we look at some of the other areas as well, fintech and cloud, these are sort of areas where many investors see future growth to come from. But again, in this quarter, they've had a few challenges because of the macro environment as well. One of the interesting things I think about this is I think this was well telegraphed. We knew this was going to be an extremely tough quarter. For Chinese tech in general, I'd say there is a slightly more bullish outlook over the coming quarters. They expect, we saw Alibaba post flat growth for the first time in the second quarter of this year. But investors are expecting growth to pick up. Again, not to those levels we're used to in the past, 30-40% growth every quarter. No longer will we see that for a long, long time, but they are expecting at least a pickup in growth as these businesses sort of cut back a bit of spending, be a lot more effective on their cost control and their investment, and really reposition to areas they think they're going to see the growth coming from in the future.
It really is quite remarkable, though, that they have reported their first ever revenue drop. And typically, I mean, you know this, but you've been following the tech sector for a very long time. And the thinking for many of these investors has always been, let me try to tap into as big a growth as possible. And here you are, you're not just seeing it in the US, you're seeing some of the growth stocks actually taper out in terms of their growth outlook. But right now, you're beginning to witness it as well in Chinese stocks, the likes of Tencent, one of the big bellwethers of the industry, posting a revenue decline. So you say that the outlook is turning a little bit more positive for the sector. Where does that optimism come from?
I think the optimism comes from a couple of places. One of the things we've heard on the earnings call, and again, we'll be interested to hear what Tencent says in a few hours on their earnings call, is they've used this time, particularly the regulatory scrutiny, to really look at their businesses and say, well, actually, what areas of our business do we need to invest in, and what areas of the business do we need to cut back in? And that's one of the things you've heard from Alibaba, from Tencent, say, we're going to put money here, we're going to cut back here, we're going to reduce staff here, and we think our strengths lie here. and we're going to be very disciplined in the way we go about investing, and that's going to be key.
And to that point, obviously, there's one name in particular we were talking about yesterday. A report came out suggesting that Tencent may be looking to ditch their stake in Meituan. So hopefully we can get some more information on that one as well.
Yeah, and one thing, I mean, with Tencent, you know, we often talk about SoftBank in Japan a lot as a big tech investor. A lot of people don't realize Tencent has poured billions of dollars into companies around the world. They have huge stakes in a number of companies, and over the past few months, you have seen them begin to sell off some significant stakes in JD.com, the e-commerce player, in Sea, the gaming and social media giant in Singapore as well. And they are using this, I think, in two ways. First, to raise cash, but I think part of this also is to placate some of the concerns from Chinese regulators that perhaps companies like Tencent and others have just got too big, and they shouldn't be having such significant stakes in other big giants too.